Hi, everyone. Welcome to the Dundee Goodman Merchant Partners Live Investment Summit. Today, we have President and CEO Jonathan Goodman with us. Jonathan Goodman has 34 years of experience in the resource and investment industry, working as a geologist, senior analyst, portfolio manager, and CEO of a producing mining company. Today, we're going to start off with an in-depth interview with John. Then we're going to be opening up the floor to accept questions. Remember, you can submit your questions in the Q&A panel to your right-hand side, and then we'll move towards questions after the interview. Without further ado, let's dive right into the interview now. So, John, let's start with an easy question. Okay. What is Dundee Goodman Merchant Partners?
Dundee Goodman Merchant Partners is the merchant banking arm of Dundee Corporation. When I came back to Dundee Corporation in 2018, I came back because I saw a tremendous opportunity to invest in the mining side. And rather than do it the way we've done it in the past, the idea was to step back and put the right team together so that you can really properly take advantage of the opportunity that we saw. And so we put together a first-class team of people who all have, many of them more experience than me, and some with less, but all have different experiences. And we talk about mining, and the one of the things in mining that really does hit you in the head every time you come at it is how many different things you need to know to really get mining right. And we've put together a team with geologists, mining engineers, metallurgical experts, people with experts on how resources are put together, expertise in environmental science, operations, projects. So we've got, and of course, financial analysis, financial management. So we've got one of the best teams that I've ever worked with, and basically it's a team of people who I've known for many years and trust thoroughly, and some of the best people I've ever worked with.
That's great. You talk a lot about team, John. What else makes you guys better as mining investors than, say, my broker or a newsletter writers or even a mutual fund?
Well, I mean, you use the word better. It's not about being better or worse, but for the most part, most people have to rely on just what's publicly available in the information. We've got a team of people that has north of 200 years of experience. I think when you add it all up, the team's been to visit something like 500 or 600 properties in over 50 different countries over the years. There's a tremendous amount of expertise and experience just within our own team that we have to draw on. On top of that, we often will sign a CA with companies and do very deep dive due diligence in the companies we invest in. So to us, it's not due diligence to get insider information. It's due diligence to get insightful information. We have the ability to really understand what we're investing in, and that helps us. It's not about picking winners; it's actually about avoiding the losers.
Mm-hmm. So, what is the problem currently with the publicly available information in the mining space?
Well, let's start and say Mark Twain defined a mine as a hole in the ground with a liar on top. And as someone that's been doing it for a long time, I would tell you that for the most part, he's right. And it's not intentionally. It's not like there's a lot of people that are intentionally lying. But the reality of it is mining is a very complicated business. And a lot of the promoters out there, I mean, first of all, there's a lot more companies than there are money. And in the last 9 years, we've been in a bear market. So what you tend to get when you meet with managements, you meet with companies, you tend to get the best case scenario. And when you invest, you really need to have a realistic case scenario. So it's from our perspective, it's not about, it's about looking at the data with a new set of eyes. It's the ability to do a proper peer review on the data. It's ability to test some of their geological assumptions that they've done. And it's the ability to really understand and determine, is this an investment that we really want to make, or is this a little overhyped or not? And what we have found is that the quality of the publicly available information out there tends to be not as good as you would like it to be. So we do our own work and make our own decisions.
That's great. So you mentioned a little bit earlier that you see an opportunity right now. Can you tell us a little bit more about the opportunity you mentioned?
Okay, well, I mean, like let's recognize that in 2010, 2011, the gold cycle peaked, and it's been in a bear market pretty much since then. So you've had a lot of companies and a lot of projects completely starved of capital. And there's many reasons why the capital exited the business. It's not just about metal prices. It's also has to do with the fact that, you know, people did PEAs that never came true, and there was huge cost inflation. So investors lost their trust in the industry. And so, one, the stocks were and still are very, very depressed. And that's the first part of the opportunity. But the bigger part of the opportunity is looking forward. And you're looking forward, you know, we can talk about gold and what's happening. You know, it's being exacerbated in the present situation by central banks spending all this money. But even before COVID, this was still happening. Central banks were spending a lot more money, and governments were spending a lot more money than they take in. And the reality of it is, if any of these governments in the world were a company, no one would lend to them. And because they're a government and they can print money, they do get to borrow huge amounts of money. But we've got a very special thing going on right now, in that interest rates are very low. Governments are spending even more so than they were before. And you know, it's bringing a lot of attention to the gold market. This isn't going to stop when COVID ends. You know, you may see, I saw gold went down about $100 an ounce about a week ago because there was rumors of Russia approved a vaccine. The reality of it is, the damage that's been done for COVID is going to continue quite a bit into the future. So we still think there's a lot of wind in the sails in the gold side of the business, and it will be there for quite some time. And these gold cycles can often last between 5 and 10 years, and they can be quite significant. But then when you step back beyond just gold, I think you really need to take a look at the world and recognize that we are really an economy, a global economy, trying to wean itself off of oil and gas. And that's a really important thing to recognize, because when you look at what are the solutions to a low carbon, we've got Tesla and the battery technology. We've got, whether it's nuclear energy, wind, solar, all of these different technologies use metals, and they use metals at very, very significant rates. So in a lot of senses, mining is going to become the next oil and gas. And as the world embraces, whether they embrace it for climate change or whether they embrace it for pollution, as Robert Friedland likes to say, it really doesn't matter. These trends are happening and moving. And we're going to have to produce a lot more metal, copper, nickel, cobalt, lithium, graphite, right across the board, and zinc as well in the future. And that, to me, says we're entering a very special era for the mining industry.
Yeah, John, you talk a lot about what's happening in the world right now. COVID-19, industries we need to be moving away from and towards. So why are you here today? Why do you want to tell others what you do?
Well, I think we're very unique as a company, and I think I want people to understand that, when we actually make an investment into a business, it comes with a lot of homework and a lot of work, and I want people to understand that we're trying to build relationships out there. We want to see people's deals when they have deals. We want to see the stocks that we invest in trade better. So what we're really trying to do is get a dialogue with a new group of people. We all grew up in the institutional side of the investment resource business, and so we're here because we want to build more relationships.
That's actually a great segue to my next question. I'd love to get to know a little bit more about the companies you partner with. Can you touch on whether there's a direct benefit for those companies?
Well, when we partner with a company, we usually very often starts. Let me step back a bit and say we've got three different investment themes. The first one is we have our flow-through funds, CMP, which is run by our CMP group out of Toronto, and they invest in Canadian exploration companies. And it's a very traditional flow-through investing. It's been there since 1983, and it's raised about $4 billion over the years. And I think we've been the largest in flow-through for many years. And then we have what we call our new venture equity fund. And our new venture equity fund is just that. It takes positions in starting in companies where they may not be at a point where you can take a 10 to 20% position in them at this stage, but they are really exciting businesses run by good people, and on projects that we like what we see, but there's just not enough information there to take to make a larger investment. And that's our new venture equity fund. And the third one is what we call our, for want of a better term, a private equity style, and that's where we would take a larger position. I'll talk mostly, on all of these things. We have a team of people that have been to many of the projects that we're investing in many years ago. But on the third one is where we actually sign a CA and do a deep dive technical due diligence, and mostly because you're making a very significant investment into the company. We share that information with the companies we invest in. I mean, we want all these companies to be better. If we see something and we're wrong, they'll help us determine that we're wrong. But more importantly, they get a third party to see some eyes on their project, and for them it's a peer review. And peer review is a process in engineering that's used in all of the major companies, but junior companies don't have access to that. So to some extent, we can work with them and talk with them and discuss some of the issues that they need to be thinking of that maybe they aren't, maybe they are, or maybe we have different approaches. But I think it gives them someone to talk to that they can. And I think everyone's always said that the CEO job is a very lonely job, and so we can come into these companies and be an investor that has been in their shoes before and understands the stresses on their day-to-day life and can work with them on how to solve some of their problems.
Jonathan, are there some examples of companies that you're currently partnering with that you could speak a little bit about?
Sure. I mean, we've got a lot of investments, but I'm going to talk about three in the latter stage, and one of them is Maritime Resources. We have, I think we own somewhere between 18 and 19% of Maritime. They're developing the Hammerdown project in Newfoundland. We really like the asset. We've looked at it closely. We really like the management. Garrett McDonald, the CEO of Maritime, has done an excellent job. And now he's working towards bringing this thing to a feasibility study. We've put money in on every round of financing, and we've worked very closely with him. And he's going to build something that we see as a 50 to 60,000 ounce a year producer. It's going to have very favorable economics because it's a very high grade deposit, and we don't think it's going to take a lot of capital to get that mine into production. So Maritime is one that we're quite excited with. There's another one that we looked at. It was Centaurus Minerals. They have the Jaguar nickel project in Brazil, and we took a 5% position. They've recently announced that they have 48 million tons of a little over 1% nickel, and in addition, and just using different cutoff grades, they also have over 20 million tons at 1.5% nickel. So we see this as going to be a combination between an open pit and an underground mine. And when you sit back at nickel, and nickel's, there was an article a few weeks ago that said these lithium batteries should be called nickel batteries because there's more nickel in them than lithium. Nickel is going to be a very important metal as we move forward. This project's a very exciting project. It's in Brazil. We still see a lot more opportunity there than to enhance those reserves and resources. But we also see a first-class management team that's committed not just to getting this thing, but committed to doing this thing right, doing right environmentally, making sure that they practice best practices from an ESG point of view, and that's very important to us. Is that they're gonna develop this thing in the right way, and we see very good things for this company as things move. And the third one is Saturn Resources. Saturn has a deposit in the Kalgoorlie Belt in Australia. They have about 700,000 ounces in their resource, but since they've announced that resource, they've been doing all kinds of drilling. We speculate that that's probably north of 1 million ounces as we speak. Saturn is once again a well-run company with a top management team in place. In this same Kalgoorlie district, there's another company there called Capricorn Minerals, which has a $675 million market cap, and I think their mine plan calls for about total of 1.1 million ounces at 0.9 grams a ton. We think Saturn is going to end up with more than they have. Now they're farther advanced. They have a feasibility study. Capricorn is still earlier, but we think looking at the way the geology is, and in addition, Saturn has a very large property, and we think they could have other satellite deposits on the project, and its market cap is only $77 million. And it's done well. We bought it at a lower price, but we think Saturn still has a lot of opportunity ahead of it. So that's just three.
Yeah, and thank you for sharing in such in-depth detail about each of those projects.
Yeah.
Now, I want to change gears a little bit. Jonathan, you talked a little bit about how things have changed even in the last few months because of COVID-19 and everything around that. But I want to take a step back and look at the mining industry over a longer period of time. In your perspective, how has the mining industry changed over the last 30 years?
Well, I think if you were to look at a firm like ours 30 years ago, we would be talking mostly about geology, because when you put a good deposit together, it almost always certainly got mined. And that was what was different 30 years ago. Now, I think as an industry, I think we've had to sit back and recognize that mining isn't just about mining a deposit. It's about working with communities. It's about understanding that it's not just good enough to be able to mine it. We have to make sure that the environment is properly taken care of. We have to make sure that the long-term environmental remediation is done. We have to make sure that communities understand what's in it for them, why this is a good thing, how we're dealing with the environmental risks. The mining industry has become a lot more sophisticated in how we deal with the environment, how we deal with people out there. And I think that's what's changed the most.
For sure.
Getting a permit is a process, and it's a long process, and it involves talking to communities.
Yeah, and I definitely see this as a concern for newer generations, younger investors, etc. as well. So obviously, Jonathan, you've been doing this for a long time. What are some of the biggest lessons you'd like to share with us that can make us become better investors ourselves?
Well, I think one is do your own work. When I was very young, I worked at a brokerage firm for the summer, and I remember I bought 1,000 shares of a stock, and I was having dinner with my father and one of his friends, and told them the stock I bought, and they basically told me that I was an idiot for buying that stock. And of course, the next day I walked back into work and I sold the stock, and I think I made enough money to cover my commissions. And over the next 2 months of that summer job, I watched the company triple. And when I went back to my father and I said, "You told me this thing was lousy," and he said, "Well, you should have done your own work. If you'd done your own work, you wouldn't have sold it when I told you it was lousy." And so you actually have to do your own work in this business. You have to actually have your own conviction and do your own work. I think the other thing is people need to know what they don't know, because when you look at the skills required for mining, whether it's finance, geology, mining engineering, metallurgical engineering, geophysics, and you go right across the whole board, environment, operations, project management, and all that. When you get through all that, no one person brings much to the table other than one or two skills. So what we need to do is understand where we can answer the questions we don't have and how we can get good answers. So be honest about knowing what you don't know and know how to get the information you need to know is also very important. And that's why we always say mining is a team sport, is because we recognize across the board that we need a strong team of people with different skill sets to make sure that we don't trip over ourselves. And the last one is think long term. And I know it's hard, but like when I talked about Centaurus Minerals with the Jaguar project in Brazil, the nickel price is $6.60 today. But we also know that over 50% of Canadians say their next car is going to be an electric car. So you have to really think long term and try and anticipate where's that nickel price going to be. I mean, these guys are still drilling this deposit, so it's going to be a few years till it's in production. So never lose the long term aspect. And the final one is humility. Is that I've always joked that this industry, because it's so cyclical, it turns people from being geniuses to idiots in a nanosecond. If you can remain humble in the good times, because no one's right 100% of the time and no one's wrong 100% of the time. And if you can keep your humility, you're not going to think that you walk on water and make bigger mistakes.
Mm-hmm. That's definitely some great advice, and thank you for sharing all of your insight on that, Jonathan. Now that we are better investors, having listened to your advice, what are some of your favorite stocks right now that we should be watching as well?
Well, I mean, I mentioned a few of them already, like Centaurus, Saturn, Maritime. There's I think other ones that we like. That we have a good position in Reunion Mining, which is drilling some very interesting targets in Guyana and French Guyana. We have a good position in Zinc of Ireland, which is a company that we like their deposit in Ireland. And I mean, the big ones I've already mentioned. I could mention Dundee Precious Metals, which is one that I founded, but we recently sold the bulk of our position there.
Great. Well, that's all the questions that I have for you today, Jonathan, and thank you very much for taking your time to answer all of them in such detail as well. I'd like to now open up the floor for questions from the audience. Remember, on the right-hand side of your screen, you have a Q&A panel you can use to submit questions. So let's start off with our questions now from the audience. Jenny has two questions for you, Jonathan. Since we're talking about investing and what stocks to look at, Jenny's asking, what is a red flag for you, John, before investing in a company?
Okay, my first red flag is when you meet with managements and they talk. First of all, my first red flag is when people talk about creating value, because I find that I talked about humility before. I find it quite arrogant that people actually think that the value is there. It's in the ground. Very often, by the time we're making the investment, you can see what the value is. We like to think of it as a de-risking process or enabling value. So creating value to me is a sign that you're dealing with a level of arrogance that won't necessarily get out of their own way. Other things that triggers for me are people that talk just in ounces. I know I mentioned Saturn had 700,000 ounces, but their grade is a little over a gram a ton. And a gram a ton at today's gold price is worth about $60 a gram. And we need to keep in mind that we're always converting rocks to money, which is really what the business is. So when you meet with these people and they talk, we got so many ounces here and so many ounces there, and you kind of get frustrated and say, stop. Just let's talk about economics. And I always like to remind people that the largest gold deposit in the world is seawater, and it'll never get mined in any of our lifetimes, but because the grade is way too low. But the reality of it is gold's everywhere. So I think those are the big ones. You know, I remember when I was a lot younger and I went to visit a mine, and this was early in my career, and so I was, you know, you do when you visit a mine, you want to calculate the tons per vertical foot or ton per vertical meter, and I remember looking at the guy and saying, you know, I'm trying to do the math here, and it looks to me like you've got so many tons per vertical meter, which would suggest that you should have, you know, a 500 ton per day mine here, based on the rules of mining. But the reality of it is, you're building 1,000 ton per day mill. How do you explain that? And I'll never forget it. The guy looked down, wouldn't make eye contact, and just said that decision was made in Toronto. And I knew right away what to do. And so those are just some of the red flags.
Mm-hmm. Now here's Jenny's second question. Why don't you think millennials are investing in mining right now, in your opinion, Jonathan?
In my opinion, I think, you know, mining comes with a long negative tradition associated with it. And, you know, millennials are very conscious about the environment and very tech savvy. Mining has always been a slow industry to adapt to technology, although it is doing that right now. So I think millennials, and, you know, we still see things like the, you know, some of the historic problems that the mining industry's had, like that tailings dam collapse in Brazil. And so the reality of it is that we need to do a better job talking to millennials about mining, because they're happy to own a Tesla, but they're not happy to own a nickel mine. And they need to understand the link, but they also need to understand how far as an industry the mining industry has come relative to the fact that you know, we do a way better job environmentally. And I'll give you a good example. And the best example I have is the city of Sudbury. And now we have the Goodman School of Mines at Laurentian University, which I'm chairman of the board of. And there's some great professors there that have done a lot of research. Now, if anybody is over 60, they'll remember Sudbury as a place that was once compared to the moon, because the environmental fallout from all of those smelters was really nasty and really bad. And if you go to Sudbury and have an old cab driver, they used to talk about how they used to have their cars painted every year because of the fallout. But what's happened is, and this is, I think, also where Canada comes in as a country that's helped fix things, is that in Sudbury, they actually looked at the environmental problems and they fixed them. But not only did they fix them, they also fixed their minds and their practices so that they don't create it. And if you go to Sudbury, you see a city with about 200,000 people. Most of the people that live in Sudbury live there because they like the lifestyle. They go to their camps or cottages. They go fishing in the lakes. They have a very outdoorsy lifestyle. And at the same time, within a stone's throw, there's probably 7 or 8 mines and 2 smelters operating in the area. So to some extent, you know, the problems of mining 50 and 60 years ago aren't the same problems that mining has today, but they're still the same problems that plague us and plague our perception of mining. And modern mining has come a long way. So from our perspective, you know, we want to see modern practices in every mine. I mean, we're a signatory to the Principles for Responsible Investing, and we talk to every one of the companies we invest in about their environmental practices, how they're going to do it, and make sure that they're tuned in to doing things the right way. And I think millennials, for the most part, I don't think most of them have had the experience of modern mining. And, you know, you see them at most of them are living in cities, and, you know, there's no NGOs advertising about the good things that mining does. Mm-hmm. Yeah, we all drive cars and bicycles, and there's pretty much nothing that we do that doesn't embrace mining. So
yeah, there's definitely a disconnect there. Here's a question from Hugh Williams, and I hope I'm pronouncing your name right, Hugh. they're asking, will you invest in Eastern Europe, Central Asia, Mongolia, or Turkey?
Well, the first part is Eastern Europe. Dundee Precious Metals, which was a company that I founded and I'm still chairman of, has its operations in Bulgaria, and we have projects in Serbia as well. So the answer to Eastern Europe is absolutely. Mongolia, I have never invested in Mongolia. I know that there were issues with Oil Togu when it first got started. But the reality of it is, when we look at any country, we do a lot of pre-work. And the first question is, you need to ask yourself is, does that country want you there? You're going to be an international investor. Do they want foreign investment? And you start from that and understand what the processes are. But if you can actually have the right framework, the right dialogue, understanding that there's a stable government under there, and understanding that really the trade-off is we're going to bring modern environmental and modern mining practices to the country, you can actually get a pretty good agreement in many of these places. As I said, I haven't invested in Mongolia, and I don't do much in Turkey, but we've done a lot in Eastern Europe. What was the last country?
It was Central Asia and Turkey as well. I don't know.
Yeah, I said, we would look at pretty much any country, but we'd really want to do a lot of work and really understand what we're getting involved in.
Mm-hmm.
The only place we don't really invest is Russia and really China, and that's because we don't believe those countries really want us there. It fails that first test.
Mm-hmm.
So
here's a question from Jay. Can you comment on Buffett's big bet on gold the other week? Was this really the paradigm shift that some people are making it out to be? What's your opinion on that?
Well, the first of all is nobody really knows except maybe Warren Buffett and Charlie Munger. I'm just trying. I'm actually now looking at my phone trying to find the quote. Yeah, I think Charlie Munger once said, "I think gold is a great thing to sew into your garments if you're a Jewish family in Vienna in 1939. But I think civilized people don't buy gold; they invest in productive businesses." Well, that was something Charlie Munger said in 2013, and lo and behold, here we are where they bought it. But recognize that, the world does feel probably a little like Vienna in 1939. It's not the most stable place. We've seen the economies get crushed right around the world. Businesses are suffering. So, and the other thing is that mining companies per se have really done a much better job of running their businesses and being profit motivated and making money, which is something that they didn't do as much of in the past. So I think it's more a function of that, they have changed their thoughts, and that recognizing that the world is less stable than it's been in many years, and that deficits have run amok, and that these companies do pay dividends and make a profit.
Mm-hmm. So here's a question that was submitted by email beforehand. It reads, how would you compare Dundee Goodman with a traditional broker on the street?
Well, I think in the sense that, we have some similarities to a traditional broker, is we will take fees when we do a transaction, but at the same time, we don't do anything unless we're going to invest our own money. So I think it's very rare that you would see a traditional broker buy their own deals. Brokers make money by selling doing investment banking and selling securities to third parties. We make money by investing in our own deals, and our fees, for the most part, cover our overheads.
Mm-hmm.
So
here's another question from Hugh. What's the preferred investment amount for PE style finance? What's the minimum, max, and what's the average?
That's a good question, because when you say PE style, we don't really have rules. You could have a deposit that may one day be worth $1 billion, and yet it has a market cap today of $30 million. So when you're investing in some of these companies, you have to recognize that your initial investment is often your ante. And that's probably why I think a lot of private equity groups struggle with the mining industry, is because if you look at the investment as a de-risking process, they're going to have to raise money a number of times. And that's where public markets work better than private markets. And not every investment works out. So the reality of it is as a public business, you can make a series of small investments. When the de-risking becomes so much that you're very comfortable, the risk reward is so overwhelmingly in your favor, then you can make a much larger investment. So it's not about dollars and cents. It really depends on what are the risks at that stage. And sometimes your first investment is small when the risks are very high, but a year and a half later, the risks have been substantially de-risked and you can make a much larger investment. And you have a relationship with the company for 2 or 3 years.
Mm-hmm. Makes a lot of sense. The next question is from Nermina. Sorry about my pronunciation. She asks, you've talked about nickel as a metal of the future. What others do you consider to be in that category? And what is your opinion on borons specifically?
Okay, I mean, you're right. I mentioned nickel. I mean, we do like copper a lot. We like gold and silver. We like zinc. We try not to get too far out the curve into things that we don't know as well. But we have a lot. What was the metal you asked about? Boron?
Yes.
I've looked at one boron project in my life, and I wouldn't consider myself an expert on boron, and I haven't looked at the supply demand recently. So.
Okay, so the next question is from Hashim. Oh, sorry about that. Here's another question from Jay. A general question. There's lots of talk recently about the progressive decoupling of China and the US. In your opinion, Jonathan, what kind of opportunities and risks, if there's any, does this present for the mining sector?
Well, I mean, certainly China has been a large investor in the mining sector right across the world. And I don't really, from a geopolitical point of view, we don't, we don't really invest that often with Chinese companies, but I mean, they are there. The ones I've had the pleasure of meeting, I have no issues with. Some of them practice very good practices, are very capable, but it's really company by company. But looking at, certainly from a competing point of view, I think that most countries would rather have investment coming from the public markets in Canada than foreign-backed companies. So I think that we'd be, companies from Canada would be much more preferred over a Chinese company as an investor.
Definitely. So Michael's asking, what are your thoughts on Ecuador as a jurisdiction, and specifically mining approvals for INV metals and SOVO?
Okay, well, Ecuador is a country I do know quite well. I've been there many times. I've met many of the government officials. Ecuador is a country that wants to embrace mining, but they want to embrace modern mining. They want to, embrace mining companies that are going to bring in best practices from an environmental point of view, from a social community point of view. And, the Lundin Gold has done a wonderful job there, and I think they've been a very good model. But it's still early in the curve, and so there's still a lot of noise. But at least that's a country where you step up and say, the government there does want you. And you can start with the second part of it is they have a mining law, mining act, and I think if you follow that and work closely with the communities and with the governments, that all of these projects, provided they're designed right, will eventually get over the top. That doesn't mean it's not going to be a bumpy road. There are still forces against the projects. But my personal belief is that you're starting, at least from the support of the government, is a very important first step. And Ecuador as a country is in a very tough financial situation. They're an OPEC country that's very tied to the price of oil. They recognize they need to wean themselves off of oil and gas as a primary thing. So they need to have diversification. And that's why the policy has been so favorable towards mining. But when I say favor, it's favorable towards responsible mining. And they're very clear about that.
Mm-hmm. So here's another question from Jenny. And maybe you've touched on this a little bit already, but specifically she's asking, do you think that nickel will get the same reputation as cobalt as an EV metal?
Well, nickel is more than just an EV metal. It's also a stainless steel metal. So eventually, but yes, I mean, we're not seeing the EV side of nickel is very small in the grand scheme of things compared to the stainless steel side. And that's why when you see Elon Musk saying we need more nickel, because he's looking out for when everybody's driving a battery operated car, there's not enough nickel to go around. So the reality is, the answer is yes. I think EV will become a very significant portion of nickel, but it won't be just an EV metal. It'll be much more diverse than that. So we do see good things for nickel longer term.
All right. Let's see what the next question is. So this is a question from Karen. Cabral Gold is in Brazil. Quintin Hennon just endorsed the company. And they're starting to drill where they have 23 samples averaging 92 grams per ton. Do you have an opinion on the stock?
I don't. So I really couldn't comment. I haven't looked at it. But 23 samples is not a lot of samples, but that grade is very exciting. So I'm sure that there's something that needs following up. And then from there, it's just I have no idea. I don't know enough details to really make an intelligent comment.
Gotcha. So here's a question from Robbie. Do you think that mining projects in Tier 1 mining jurisdictions like Canada or like Australia will command a greater premium over the next few years?
Well, certainly they do have a premium. If you look at the market cap of Canadian companies and then their equivalent companies somewhere else, the Canadian, Australia ones tend to trade at a premium, and then you're paying for that because clearly in those countries there is an accepted process towards getting a mine properly permitted. But I also think that's not always where you see the best value. I mean, right now we do see a lot of value in Australia, and also some good value in Canada, but it isn't always. So I think you actually have to look at, I think there was a great book once written. It was called The Zebra and Lions Country, and it talked about some zebras stay in the middle of the pack and eat the small grass, and some kind of wander out. But the ones that wander out, they get to eat better grass, but they have a little more risk because they can get eaten by a lion. So when you look at some of these other jurisdictions, you need to have a trade-off. So if you're going to go into one of these other jurisdictions, it may have a little more risk. But if the trade-off is that the geology is so much better, it may actually offer a better risk-reward characteristic. But I do think that, at least for the time being, we're going to see the continued trend that those countries will trade at a premium.
Mm-hmm. So Emil wants to go back to the Ecuador topic we were just talking about before. Can you talk a little bit about Atico and the Ganoza family?
Okay. I should say Atico Mining is a company that I happen to be on the board of. And I wouldn't talk about the whole family. I talked about Fernando Ganoza, who's the CEO of Atico Mining. And I think they've done a tremendous job. They operate a mine in Colombia, and they're also exploring and developing a project in Ecuador called the La Plata project. I am a shareholder, and I like what they're doing very much. And I think that they're find people who are working very, very hard and embracing all of the positive things about modern mining.
So here's the question from Hashim. He asks, why has the pace of M&A been so slow? Entrenchments?
Well, I guess entrenchment is a question, or the pace of M&A is slow because it's very hard to do an M&A transaction. One, it's really hard to do due diligence in a COVID environment where most companies like to actually go to site and spend a lot of time with the managements of all the operations. So one, you have getting a deal done in this environment is very hard from that perspective. But I wouldn't say, I mean, certainly entrenchment is one negative part of it, but the other part of it is the investment community doesn't want to see deals with very large premiums. You have to put yourself in the shoes of some of the big portfolio managers, and they wake up and find out one company that they own is paying a 40% premium to buy another company they own, and you find out that the one that's paying the premium is down 20%, and the one that's getting the premium is only up 10%, that their portfolio goes down. And so they want to see deals that actually make sense. You know, what are the synergies? And if the synergies are just we're going to have one management team, that's usually not enough. So I think what your companies need to actually get together for more reasons than just taking two companies and making them one. And I think that's where it becomes very hard. You really need to understand why is this one company going to be a much better business than the other two were. And that's when the market reacts favorably to these types of deals. And that, plus the fact that you can't really get on a plane and go do due diligence, makes it hard to get these deals done right now.
Yeah, definitely. Here's another question from Michael. He's asking, do you see Namibia, being a good jurisdiction to operate in? And are your companies looking to expand there?
Namibia is one of my favorite countries in the world. So yes, it is a great jurisdiction. I spent a fair bit of time there, you know, right now I don't think we have certainly at Dundee Precious Metals we have one investment in Namibia. I don't think we have a lot of significant investment, but we do like Namibia a lot. Are very favorably disposed to Namibia, and would look to invest in Namibia if there was when we saw the right opportunity. So.
Mm-hmm. I'm just going to check if there are any more questions right now. So it doesn't look like there are any more new questions. And I think we're also coming up to the near the end of our summit today. I would like to thank everyone that submitted questions. And if you didn't get a chance to get your question answered, or if you just think of a new question after the summit, please reach out. You can reach out to Dundee Goodman Merchant Partners at their website, dundeegoodmanmerchantpartners.com, or on email at info@dgmp.ca, and they'll be happy to answer you. There's also an opportunity for you to provide your contact details for management to reach out to you in the survey that you can be redirected to after the closing of this webinar. Finally, I'd like to hand it over to Jonathan for the final word.
So I say thank you. This is the first time that I've done this, so this was an interesting first experience, and hopefully we'll get to know some of you people better over the future. And please don't hesitate to reach out, because we're hoping that this is the start of a dialogue. So thank you.
All right. Thank you very much, everyone. Take care.
Bye.